How to trade the best double top and bottom pattern Forex indicator chart strategy on Tradingview. Understanding the double top and bottom pattern. I'll comment on the basics first before getting into the strategy. The double bottom and top are reversal patterns that appear at the end of a trend. Keep an eye out for the W shape. This is the key marker of a double bottom pattern. You need to find two consecutive bottoms at the same level on your candlestick charts after an extended downtrend to spot a double bottom formation. Here you see a double bottom accompanied by an area of support. And that's what we're going to be looking for throughout these videos, and that is confirming areas of confluence. Like, subscribe, and check out the Chart Prime link below. Use the discipline needed as a trader and stay to the end, please. The Chart Prime link below has to do with the indicators that you're going to see that are used throughout this video. Characteristics of the double top pattern. The double top pattern is identified by two subsequent peaks, approximately at the same level with a trough in between, forming an M shape. It's the inverse of the double bottom. Double bottom pattern versus the double top pattern. The double top and bottom are both possible reversal patterns, and they depend on confluence in the same way. For example, both depend on support or resistance, divergences, and even volume for a clean entry. Double top and bottom patterns, pros and cons. Double tops and bottoms are not that common and require patience. Wait for all the factors to line up, otherwise don't take the trade. Trading with the double bottom pattern. Like, subscribe, and check out the Chart Prime link below, please. Use the discipline needed as a trader and stay to the end. First, spot the pattern on longer term price charts in your Forex or crypto markets. And by longer term, I mean 15 minutes or above. Again, a longer term time frame would include 15 minutes or above because these times are where support and resistance works best. Next, wait for the prices to breach the resistance level between the two bottoms in a bullish manner, and that area is called the neckline. You can see the neckline clearly in this diagram, and where the price eventually breaks out from the neckline is where you're going to eventually enter the trade. Confirm the trade confluence with previous areas of support on longer term time frames, 15 minutes and above. This should line up as seen in the diagram with the bottom of the W. Another confluence factor is increasing volume, so check for it. Confluence means areas of agreement, so check for confluence in terms of divergence from a momentum indicator like RSI or stochastic, or even better, some proprietary momentum indicator like that from Chart Prime. Note the areas here of confluence that line up with the double bottom, so you can see again the support, you can see the divergence at the bottom, and the indicator, again that's a Chart Prime indicator, it's a pretty exact oscillator. And there's also a trend line that passes through and converges with the bottom as well. When the price gets above the neckline of the double bottom pattern, it signals a potential reversal and a bullish trend. Go long once the price breaks above the neckline. Here's an example of the price breaking above the neckline, and you see it retracing slightly and then eventually the price heading up again. Set your stop loss just below the nearest support or lowest level of the double bottom pattern. You can try different points to place your stop loss out. Experiment with that and make sure you journal all your back testing. Again, this is an example of where you place the stop loss. This gives you some idea where you might consider placing it. There's alternatives, there's options, so again, experiment where you think the stop loss is best placed for yourself. Your profit target could be equal to the distance from the resistance level to the lowest point, or wherever else you want to place the exit. Again, that's up to you. Make sure you've back tested and you've experimented a little as far as where to place that target. These patterns let traders set stops wisely to avoid losing too much in case the market changes direction against you unexpectedly. The steps involved for trading the double top are exactly the same except reversed. Pros and cons of using this pattern. Using the double bottom gives many benefits, but also some risks, just like anything else in Forex or crypto trading. Conclusion. The role of the double top and bottom pattern in Forex and crypto trading. The double top and bottoms are two more patterns that you want to add to your arsenal. But make sure you backtest them on higher time frames on a specific instrument to test their accuracy. Again, always take trades with proper confluences and make sure you journal your trades. Like, subscribe, and check out the Chart Prime link below, please. The Chart Prime indicator is what's been used throughout this video.